We're going to do a brief video here today of a currency, the USDJPY, the US dollar versus Japanese yen. And what we've got in front of us here is a daily chart with three moving averages on them. You can see them clearly. The green is a 5-day, the red is a 20-day, and the blue is a 200-day moving average. Let's go back here a little bit and get a longer term picture of what's going on with the Japanese yen and the dollar. If we start here, February 21, we can see we've got a violation to the upside of the 200-day moving average, which in this currency is just a beautiful indication to get long and stay long. You can see how this USDJPY respected almost just perfectly this 200-day moving average until about March here of 22, the spring of 22, when it exploded to the upside. You can see that we had relatively minor volatility all through this period of time through 2021, and then as we began to enter the fall of 21, our volatility increased, still respecting the 200-day moving average, and then we exploded to the upside. As you can see here, from approximately March of 2022, we had a tremendously interesting and just great to trade rally from about 115 to about the 130 area. And you can see just absolutely beautiful 20-day moving average. You rarely see something this great where you could just stay long and really not have any kind of problems with your stomach. Even the 5-day was just almost straight as a board in some of these locations, which is just fantastic. We had a break on the 20-day, which would be totally normal after a huge rally like this. You're talking about an over 10% rally in the currency without any hiccups. You get a break in the 20-day, turned out to be a false test of the 20-day moving average, and then again a crossover. This is a 5-day, the green crossing the 20-day. That's a classic buy indicator in almost anything when you're using these moving averages. And then we just went from that 130 roughly a point all the way up to close to the 140 mark, 139. So that movement in general can be considered, at least in the short term, a blow off top. And you can see that we now got a very hard, for the very first time in over almost a year, we got a very, or more than a year, we got a very hard blow off top that put us down what is that, a full 10 points from 139 all the way down to 130. We got a solid close below the 20-day. We got a rollover, a solid rollover of the 20-day moving average, and now we're getting tests of the 20-day moving average. So the Japanese yen is still in a bull market. This is the US dollar against the Japanese yen, is still in a bull market, but we're clearly putting in an attempt to come down and test the 200-day moving average. If you extrapolate this 200-day moving average out to about to here, we can see that we're probably going to look at a test of the 200-day moving average in October at about the 130 level, right around in here. 125 to 135 level, probably close to 130 level in early October, and we should get a test of the 200-day moving average at that point, worst case. In general, if this current movement, meaning today, breaks down, today or tomorrow breaks down and goes below this bottom here, which was the 139, I'm sorry, the 130.39 yen level, if it breaks through that, then you're probably going to get an earlier test to the 200-day moving average, probably down here in early September. So it's going to depend what happens in the next few days. If we close above this 20-day moving average and the 20-day moving average begins to turn back up like it did right here, then we may be going to make new highs on this currency pair. We have to kind of wait and see. But in general, this particular setup right here is the market trying to make a determination as to what it's going to do. It's going to test this 20-day, which is doing today, and if it bounces off hard and goes down here, then we'll go down lower and get a test of the 200-day. If it breaks to the upside here in the next couple days, and the 20-day confirms that with a turn up, then we're probably going to make new highs. So right about today is an inflection point that we're just going to have to wait and see what happens. Let's scroll down here and see what RBAM Research says about it. These are algorithmically generated prices that RBAM Research puts out every day. And we see here these are cash forex, not futures, but cash forex. We can see the USDJPY has a buy and a short, and today it's listing a short position. Each day it'll list either a buy or a short. Today for 1 day hold, it's saying to short at 133.05. Now, if you go all the way back to the start of the new session, late yesterday afternoon, you could have shorted at that rate and got out already at a profit. I'm not going to go back and show you that because it's too much work on the charts to do that, but you could have made a profit already by shorting at 133 and getting out. You would have had to get out quickly because obviously the market rallied. This particular holds a 1 day hold. You could potentially see that again today or tonight. You also will notice that you go from 133.05 and the longer holding periods, you're out here 133.44. So potentially you could have put on a 20-day 133.44 hold trade, and you'd be down right this second. But again, you have 20 days to make some money. You would have already made some money if you shorted at this price very early in today's session. We're talking about yesterday, before 7 p.m. Eastern time. So the way this works, these are all algorithmically generated entry prices for currencies. We do stocks and we do futures as well. But you have a 1 day hold, 2 day hold, 5 day hold, 10 day hold, and a 20 day hold. That basically means when you select these prices under the 1 day hold, you're looking to hold a maximum of 1 day, take your profit as soon as you get it, close it at a loss if you don't get a profit by the end of the 1 day hold. So that means buy today, close into the market tomorrow. Same thing here, 2 day, 5 day, 10 day, 20 day holds. You use the corresponding prices. You close out at a loss if you don't have a profit by the end of the hold, and you take your profits as soon as you get them if you do. So that's basically how this works. These are put out every morning at 7 a.m. They're absolutely free, and I'll show you how to get them. All you have to do is go to rbamresearch.com. That's rbamresearch.com. They're put up every morning before 7 a.m. As a practical matter, we put a lot of these up the night before so you can check for yourself. We put them up as soon as we can. We have them out before 7 a.m. every day, but a lot of times we have them out much earlier than that. We cover 190 stocks, long onlys. We cover the forex I just showed you, longs and shorts. We cover crypto. Right now we're covering BTC, long and short, and the most liquid futures, long and shorts. They're all available again, rbamresearch.com. Absolutely no cost, no credit card required, Monday through Friday, 7 a.m. If you like this video, please, there's a link in the description, by the way. You can go to rbamresearch.com through that link. If you like this video, please click the like button. If you want to subscribe, please do that. Please leave us some comments. If you have a way to improve what we're doing, we'd love to hear it. And everything I've discussed is for entertainment purposes only. It's all my own opinion, including the entry prices are all for entertainment purposes only. You definitely should not use them for anything other than entertainment. You have to have your own research, and you definitely trade at your own risk.